Today's interest rates are on the rise, and every week it seems they go higher. As a buyer in the current real estate market, you have seen that interest rates at 6 to 7% are the new normal for home loans. These high interest rates can lead to buyer frustrations, driving buyers into smaller homes or worse out of the market. Luckily, buying your home through seller financing is a different story, and these are the seller financing benefits for buyers. What are the benefits of seller financing for buyers? Benefit number one, you save hundreds of thousands of dollars on a lower interest rate over the life of the loan. Benefit number two, there's no lender, which leads to a faster timeline and no lender closing costs. Ultimately, buying your home through seller financing leaves more money in your pocket. Who can be a buyer in seller financing? The answer? Anyone. That's right, anybody can be a buyer through seller financing. The trick is to find a seller who offers seller financing. We'll cover this later. What is seller financing? Seller financing is a flexible financing option that allows the seller to become the bank. The seller assumes the responsibilities of the bank and receives the rewards of being the bank. Seller financing is a win-win situation for buyers and sellers, as it offers more benefits than traditional financing. Now we are going to explain each benefit we discussed before. Let's say this is the home you want to buy. Benefit number one is saving on interest, which is fantastic. But how and how much? As a buyer in today's real estate market, you may already know that interest rates are high when compared to the last 20 years. During Q4 2022, the 30-year fixed rate average in the United States was 7%. The good news is that with seller financing, the interest rate is not tied to the market interest rate. In the Skelly seller financing program, the interest rate varies. For this example, we will use a 5% interest rate. The home below is priced at $550,000 and you plan to put down 10%. Let's compare the monthly cost of a 15-year $500,000 mortgage with the following interest rates. Seller financing at 5%, traditional financing at the current market rate of 7%. The traditional financing at 7%, the monthly payment is $4,494. For seller financing at 5%, your monthly payment is $3,954. The difference is $540 per month, which adds up to a savings of $13,000 in 2 years and almost $100,000 over 15 years, or the life of the loan. What interest rate savings can you expect if your mortgage is greater than $500,000? If your mortgage is $765,000, that 2% interest rate spread could save you over $150,000 over a 15-year loan. If your mortgage is just over $1 million, you can expect to save $210,000 over the 15-year loan. Wow, that is a lot of money. Now you can celebrate for two reasons. One, you'll save at least $100,000 with seller financing. And two, today's interest rate environment does not affect the seller financing interest rate. Benefit number two, no lender. Now don't get me wrong, we at Skelly love lenders. We love lenders who help our clients buy through traditional financing routes, and they do a great job. But for seller financing, we do not need a lender, and we consider that a benefit. Without a lender, the buyer benefits in two ways. One is timeline and two is cost. The timeline benefit. With a lender, the process of underwriting takes time, as the loan officer asks the buyer for information, collects the information, then sends the information to the underwriting department. The underwriting department verifies this information or asks for more information. Then the process begins again. As the buyer in seller financing, the seller is the lender and bank. The seller will underwrite you similar to the bank. The seller will request and verify tax returns, employment, credit score, available funds for the down payment, etc. With seller financing, there's not another department. The seller quickly reviews the information provided and is satisfied or asks for more information. Since the seller is performing the underwriting, this speeds up the timeline and transaction in seller financing. The second benefit of the lender is a cost benefit to the buyer. Lenders charge for their service. They charge through interest rates, points, and origination fees. With seller financing, you will not see these fees, thus saving you thousands of dollars on your closing costs. So in summary, what are the benefits of seller financing to the buyer? Benefit number 1, save hundreds of thousands of dollars on a lower interest rate over the life of the loan. And benefit number 2, no lender, which leads to a faster timeline and no lender closing costs. Ultimately, seller financing will save you a lot of money compared to traditional financing. Are you interested in saving $100,000 on your next real estate purchase? Do you have additional questions about seller financing? Are you interested in finding homes for sale that offer seller financing? If so, take action now. Set up our Q&A call below. This simple call with Skelly could save you hundreds of thousands of dollars.